Welcome back to the Wall Street Podcast. Today we're doing a deep dive into a recent Citi research report on Tongcheng Travel Holdings, that's stock code 0780.HK. The report covers their Q2 2025 results and came out on August 18th, 2025. It really gets into the weeds on their financials, segment performance, efficiency, and the outlook. Crucial stuff for you, our investor listener.
Exactly. And it paints, I think, a really interesting picture of how Tongcheng is navigating the current travel market, some strengths, but also, some headwinds.
Right. Let's start with the overall performance. Q2 revenue was up 10.0% year over year. Came in at RMB 4.67 billion. Pretty much bang on both Citi and consensus estimates.
And that non-IFRS earnings figure, which gives you that cleaner look at core operations, that was up 18.0% year over year.
RMB 775 million.
Yeah, and that actually nudged slightly ahead of projections, so suggests some effective management, I'd say.
Okay, so let's dig into the segments, because there was some divergence there. Accommodation revenue looks strong.
Very strong. Up 15.2% year over year, RMB 1.37 billion, that beat estimates.
And Citi thinks that's mostly down to the recovery in hotel ADR, the average daily rate, right?
Yeah.
Especially from June onwards.
That seems to be the key driver there. But then you look at transportation ticketing revenue.
Yeah, more modest growth there, up 7.9% year over year to RMB 1.88 billion.
And that actually missed estimates a bit. Citi's guess is weaker overall industry travel volume was the main factor.
Makes sense. But other revenues really popped.
Oh, yeah. Surged 27.5% year over year. RMB 755 million. Way ahead of expectations.
Driven by things like hotel management and advertising, apparently.
Right. But on the flip side, that newly acquired package tour business, it actually declined.
Down 8.0% year over year, RMB 662 million.
Okay.
Also slightly below projections. So a real mixed bag across the segments.
Definitely.
Now, what about efficiency? How well are they actually running the core business?
Good question. The core OTA, the online travel agency part, its non-IFRS operating profit margin, or OPM, that expanded.
By how much?
2.4 percentage points year over year, reaching 26.7%.
That's pretty healthy.
It is, and it seems to benefit from, easier comparisons on take rates, the cut they take from bookings, plus ongoing cost controls.
And they're still adding users.
Yep. Average monthly paying users, MPUs, up 9.2% year over year, came in at 46.4 million.
Okay, so we've got these varied numbers. Strong accommodation, weaker transport, good margins. What's the main takeaway on Q2 drivers, and what are investors worried about now?
Well, I think the main story is that Tongcheng managed to balance things out. The strong accommodation and those other revenues really helped offset the weaker transport side.
That ADR recovery was key.
Absolutely critical. So for investors, the focus now shifts, right? It's about Q3 momentum, what's management seeing, what's the outlook for the rest of 2025?
And crucially, can that hotel ADR strength keep offsetting potentially softer travel volumes overall?
Exactly. That's the big question mark.
Beyond the quarterlies, though, what about the longer-term strategy? What's shaping their future growth?
Right, the strategic view. The Citi report flags that investors really want more clarity from management on M&A.
Especially after those recent acquisitions.
Precisely. And also on capital allocation. Plus, more detail on their plans for outbound travel expansion, how their own app development is going, and any specific plans for shareholder returns.
So the market's looking for more concrete details on those strategic pillars.
Yeah, these are the things that will shape their path forward,
Okay, which brings us to valuation. What's Citi's take, and what are the big risks they see?
Citi sticking with a buy rating. Their target price is HK $26.
Implying what kind of return?
About 32.2% expected total return from when the report was published. Now, this is based on 16 times their estimated 2025 non-IFRS EPS.
Which is a discount, right?
It is, yeah. A discount to their historical average multiple. Citi justifies that by pointing to a potentially slower revenue growth profile ahead.
And the risks? Standard stuff or anything specific?
Well, the usual suspects are there. Intensified competition from other OTAs, obviously. Heavy reliance on Trip.com. Particularly for hotel supply. Dependence on Tencent's platforms, like WeChat, for traffic. And then, the broader macro uncertainty.
Okay, standard but significant risks.
So we've covered the investor angle. Let's just quickly touch on what this might mean for you, the general public, the traveler.
Yeah, it's interesting. This report kind of reflects shifts in how people are spending on travel. That strength in hotels, even with weaker transport numbers, it suggests maybe a preference for, nicer stays.
Or perhaps higher value domestic trips rather than just volume.
Could be. It suggests that even if overall trip numbers fluctuate, people are still willing to spend on certain segments, like hotels where prices are recovering.
So something for you to keep in mind when planning your next holiday budget. You might find hotel prices are a bit stickier, a bit higher.
Definitely could influence planning. Look, this deep dive into Tongcheng's Q2 really shows how dynamic the travel industry is right now. Absolutely. Understanding these differences between segments, the strategic moves they're making. It's all essential to get a handle on this evolving market.
It really underscores that adaptability is key.
It certainly does. A fascinating look at a company managing selective demand and costs. It does make you wonder, though, is this kind of split performance, strong hotels, weaker transport, the new baseline for travel? Or is a broader, more even recovery still out there for companies like Tongcheng? Keep an eye on those strategic updates.